Hello, everyone. My name is Hilda, and today, together with my colleagues Diana and Indira, we are going to talk about auditors and corporate governance. Uh, First of all, let's say what is corporate governance. Corporate governance arose from the belief that the separation of ownership and management within a company might create a misuse of managerial discretion. This is also known in management and economics as a agency theory. Corporate governance is then a framework that regulates the relationship between management, shareholders, board of directors, and other stakeholders. This framework is made of 8 principles. Each of them have certain recommendations that at the end just try to improve firm profitability and performance. In the way how auditors do his work is through 3 processes. Risk assessment is the first one, and there is nothing else but the study or assess that the industry, regulatory and other external factors that affect the company, nature of the entity, accounting policies, objectives, and strategies. All of this is a business risk that eventually have financial consequence and therefore affect the financial report. So the auditors need to identify how how this is going to affect his audit. For a listed company, for a full adoption for a full adoption of the corporate governance principles, a listed company would say that his inherent risk would be high. Particularly high because the entity is operating in a highly regularized sector, which is the Australian Securities Exchange. Also, if it's the first audit assignment that the auditors do, we can say the inherent risk is also risk. So this is for the inherent risk situation. Control risk also could be considered as a moderate or medium. If the company is full adopt these principles, because we assume that the company have been oversight by a company, by audit committee, and also have an internal control. So if we have inherent risk high and control risk medium or high too, we can say that detection risk, which is the other factor in this formula, we can say that we need to keep it low in order to keep this audited risk this audited risk also low. This is the table that we use to assess the detection risk based on the inherent risk and the assessment risk control. Would be important to say that the assessment risk is a matter of judgment rather than a precise measure. So Diana. Sorry, Indira.
Hi everyone. My name is Indira, and today I will talk about audit approach and strategy. First, I would like to talk about the definition of audit approach. So what is an audit approach? Audit approach is a method of analysis the auditor conduct which focusing in client's relationship between its environment they operate with their management info and the effectiveness of the control. So from the slide we saw that the control is really important it's really important because it can prevent errors and detect errors. Also, it is the mechanism in an entity which is designed and implemented to address business risks. Auditor need to be aligned with the entity's structure and corporate governance as it will impact the risk. So by fully adopting corporate governance means the company or the entity has well-designed internal control. Therefore, the auditor could choose predominantly substantive approaches and follow below strategy as field below is first, level control risk audit planning. Second, obtaining minimum understanding of internal control, and then plan extensive audit based on acceptable level of detection risk. So in conclusions, the auditor need to understand the client's nature of business and its industry in order to choose what approaches they could use and they to develop the strategy that they can do in audit. So next one is Diana.
Hi, I am Diana. Today I want to talk about the audit evidence. Audit evidence is the process. Audit evidence is the process done through which the auditor collects all correct information during the audit to generate the report. During the audit, evidence is important to consider the collection has complied to scope audit criteria, experience, and professional skills. In this case, the auditor who determines which documents are relevant to consider or which method is applicable to do it. Another important information to do the audit evidence is the procedure, policy, guidelines, description, and implementation of the process elements that satisfy the criteria. During the process, the audit evidence started with the information sources and the elements that the audit can consider is observation, documentation, testing, and configurations. The different documents can be relevant and depend on the situation. The auditor can choose what is the most important or relevant for do the information. After they collect the all documentation or testing or configuration, the auditor need to collect and do the analysis to do the report. Another important information is the component that can create a important successful and audit evidence. One is sufficient, another is appropriate. Sufficient is the quality the audit that provide the evidence for all the document that support, and the another one is appropriateness, like to relate it with the relevance of the audit evidence on reliability the audit evidence. All information is really important for it to support the main conclusion of the report for the audit. In conclusion, it's important to consider that all companies don't need to follow the framework guidelines and also recommendation provided by corporate governance, ASX. However, it's important to use an important tools to reduce the risk and fraud for the main organizations. In Australia, the number of the organizations that follow the regulation has been increasing considerably the last 10 years because the many research demonstrate that the level of profitability and performance can increase when they are using the framework guidelines or recommendation. Thank you very much for your attention.